Okay, welcome everybody to this evening's ACY Securities webinar. So coming up this week and coming up tonight, first of all, we're going to be doing forex trading live market analysis tonight. And just to give you a heads up what's coming up through the week from myself. Tomorrow we're going to go through the trade setup called the swing point break. That'll be 7 p.m. Sydney time tomorrow, Wednesday. And then on Thursday, more live market analysis at 7 p.m. Sydney time. Okay, so that's what's coming up from me. So tonight is live market analysis. We'll get into that in a moment. If you can all read through the disclaimer, that would be great. And if you're on a YouTube live stream, I cannot see your chat, but you're more than welcome to join us. Just follow the link that I've given you in the chat there. For everybody else, if you have any questions, just type them into the webinar chat or the question and answer box. I've got both open. So everybody, please just read through the disclaimer. All right, we'll move along. And now, if you don't know me, I can see maybe some new names there tonight. My name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities, and I'm a full-time forex trader. I've been trading the forex market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. And through the week, you can connect with me on our website. Go to acy.com, go to the market news tab. You'll get my analysis there, or on our YouTube channel, ACY Securities Australia. And as well, you can connect with me on Twitter and LinkedIn there. As well, through the week, you can connect with us in our Telegram channel. Contact Nathan Bray to get access to that. I'll put his details in the chat in a moment. As well, if you want to get access to my chart layouts and templates, then just contact Nathan. He will set you up. If you need a demo account setting up or help with, or any questions about live accounts, just contact Nathan. He will be more than happy to help you out. All right, his details are just going in the chat right now. All right, so let's get into tonight's webinar. First of all, we'll have a look at the news items coming out. So we are into Tuesday today. We've already had the Aussie Monetary Policy meeting minutes. We've had the Aussie Wage Price Index. It came in slightly lower. Chinese industrial production. I'm not sure why this isn't refreshing. Let me just refresh it up. All right, so Chinese dollar came out a little bit weaker as well. I think they've also dropped their interest rates today. And then we've had slightly weaker claimant count details coming up for the pound at 4 o'clock and slightly better average earnings index, which actually drove the pound up. All right. Coming up later in the day, so if you're interested in trading anything to do with Canadian dollar, 10:30 p.m. we've got the inflation figures coming out, CPI data. So it'll be highly volatile for the Canadian dollar crosses. We've got the US core retail sales, Empire State Manufacturing Index, and retail sales coming out too. And then tomorrow on the noon, we have the official cash rate for the New Zealand and the policy statement press conference. Not expecting any change, but you never know what will come from an interest rate statement. So be aware, if you're not in a New Zealand dollar trade at the moment, it's probably not the best idea just to get into one until that passes. And then tomorrow as well, 4 p.m. in the afternoon, we have the UK CPI data. Expecting a drop, but you never know. Inflation has been exceptionally high in the UK. So if we do get a higher than expected figure, that will just fuel the hawkish nature of more interest rate rises for the UK. So with that in mind, all those pairs there, with those big items coming out, especially there, we've got Canada, CPI data, inflation data, New Zealand, interest rate decision, and the pound CPI data there, then be very much aware of that. And as well, we just move into Thursday morning, just in the early morning, we've got the FOMC meeting minutes, so the market will be volatile there too. So there's a number of items there that are going to affect the market. All right, with all those things in mind, let's get to charts. We'll start with the dollar index, and I've just left this how I was looking at it last Thursday. Now, we actually did put in a slightly lower top but then put in a slightly higher bottom and we've moved up. So this range here is actually the whole of the trading range for last month. So we haven't had a month up yet. Just going to tidy everything off. If we go to the monthly chart, you'll see that we're trading inside the range of last month. Now, even if we have a month up this month for the US dollar index, it doesn't change the monthly trend. All it does is mean we're having a month up. So don't get too excited. You know, we'd actually have to, there's a minor top here and a major top there. We'd have to maybe take out the major top here to change that monthly trend. And we could have a look at a couple of ranges. There's this little range here, and there's a larger range. At the moment, we're at the 79% of the smaller range, and we're at the 62% of the larger range. So all that tells me is that, moving to the weekly chart, this larger range here is the 62% level. And we have a larger range here, sorry, a smaller range here. Within the larger range, we have overlapping fibs there. And that's where price is at the moment. 62% level and a 79% level. And also a weekly top that we're fractionally short of. That weekly top is last month's high. So we're definitely in an area where the market could stop at. A number of reasons there, two overlapping, overlapping fibs, this resistance area here. So it's worth monitoring. I'm just going to get rid of those fibs because I don't think we really need them. What we really need to think about at the moment is, because price break above this, I might just use the first range. Does price break above last month's high? If it doesn't, you can see it today. Oh, yesterday it came up and started to reject. Then we may start to see this move down. This could have just absorbed all the buyers. Sellers have come in and absorbed all the buy orders, and we could start to move down. So if we start to move below these tops here, then we could be moving down for the rest of the month. So it's definitely worth monitoring that position just there. All right, S&P 500 has been selling off. If we just move to the weekly chart, just been having a couple of weeks down. It is actually sitting on a level of day support here. So this weekly trend is up, just having a couple of weeks down, and the day trend has turned to down, but it's not wanting to move below this area of support. So, long-term trend is still up on the S&P 500. So with that in mind, I don't know if I'd want to be shorting this too aggressively at the moment. Now, if we do break below this level of support, 44.60, that does start to add the question, are we going to get a much deeper decline? And back to the weekly chart so we can see the whole movement from the 21 high. We are failing at the 79% level of that range. However, when we look at pure trends, the monthly trend here is up. We've moved above the last lower top. All right, so we might have a pullback, but we don't, we're in an uptrend. So I wouldn't get too excited at the moment. I'd need to see maybe some aggressive selling start to occur on the day chart before I get too excited. Because on the weekly chart here, it's just 2 weeks down on support. So how much further does this decline? I would certainly be watching 44.60 for potential support still. There's a number of, if you look at these days, there's 1, 2, 3 days here where we're pretty much holding off fractionally above, spiked below, reversed up from it. So until we get a clear breakdown below 44.60, this has got every chance of bottoming out here to start to move up. So I'd actually be watching for a day chart uptrend to form and then look for an opportunity to get long if I wanted to trade the S&P 500 there. All right, let's get into, first of all, we'll have a look at the euro dollar. Now, I might just take a few lines off. All right. And look at the weekly chart. We are still holding to the weekly uptrend. We did actually have an up week though last week and a down week this week, so we might be putting in a minor top here, but The big swings, that's higher bottom, higher top, higher bottom, higher top. And for me, until we break this low here, the trend is really still potentially holding to the upside. This is just corrective at the moment. So getting into that, we're at the 79% level of the decline. Last week, we were dipping below, moving back above, and we actually moved into an uptrend last week, holding at 109.43. See how we went up, higher bottom, higher top, and then into Thursday sell-off after the CPI data, and then the PPI data moved it down to 109.43 and moved below yesterday. So at the moment, we are definitely in a downtrend here on the daily, but the weekly trend's up. So which is going to win out? It's really the upside down view of the US dollar at the moment. So I'm just watching at the moment for this, give it a little bit of a, is it going to give a signal that we are bottoming down here to move up or not? That is the question. I will definitely be watching 109.43, that level that has been acting as support. Can we, if we get a clear close back above that level today, I will then be watching 109.43 for support tomorrow. We'll have to wait and see what it does today. Today, you could be watching 109.43 for sure. We did close below it yesterday, so potentially it could be resistance today, but I'm not sure if we're bottoming out down here. So I'm just sitting on the sidelines at the moment, because even if you started to look for a short today, and if we are bottoming out down in the low area of last month, this fib that I've got drawn across this range here, this is the range of last month as well. So it's just the inverse look of the US dollar index. So we're at the lowest, getting to the very low areas of last month, where where buyers will come in. So, we're very low down here. Do you really want to be selling so low down within the range of last month? I don't. However, if you're in the frame of mind that we should be selling, at the moment, we are at the 62% level of this 4-hour range, and we're holding at last week's low that's been broken. So if you're more to the downside, this to me would be a key level to trade to the downside if you wanted to trade to the downside. All right. Another level to watch. So the level that we're at right now, if you want to be on the short side, this is a key level today. Last week's low, 62% retracement of yesterday's range, as well as a higher level there to the short side that you could be looking at. It is that 109.43 level, which overlaps with the 79% level. All right. So those two levels could act as resistance today to trade down. You could be waiting for the moment, maybe a trend line break to the downside if you've got a negative bias to continue that decline down. Myself, I don't know if we're bottoming out. I don't like to be selling at such low levels when we're getting close to the low last month. So I'm actually on the other side of the coin at the moment, just watching to see if we get a good close above 109.43. All right, but clearly at the moment, that day chart trend is down. So it could just keep holding that trend, and it could move through, the low of last month. And that would signal a deeper decline. But at the moment, we are holding above the low last month. And we're definitely in the area where the buyers would potentially come in. And from a buyer's perspective as well, you can see all day today that we haven't been able to dip below 109. So depending on what side of the market you're actually looking at, 109 today could be a good level to look for an opportunity to trade up from as well. So there's actually two sides that you can be trading this market at the moment, depending on your viewpoint. All right, because the high time frame trends are up. So which will win out, the high time frames or the day chart trends? All right. Let's get into the Euro Yen, which is being rather strong. It's broken out above this area where it was holding for quite a while. Best part of a month, it was holding at that weekly resistance level, 157.99. And now the dip down couldn't actually come down to that level. So the buyers are clearly watching that area and we're happy to get in early ahead of that level. Now, we're just actually moving above another level of resistance. You have to really squash your chart in. There's a weekly level of resistance here at 158.59 that we're trying to move above today. And then really after that, the level to watch, if you squash your monthly chart in, this monthly high from back in 1998, sometime in that historical time zone at 162.42. So it looks like last month was an inside month and we're breaking north. All right, so the next major real level is at 162.42 to consider. We're seeing an uptrend now forming on the weekly. If it turned in any form down, it's turned back to up now, and the day chart trend is up. So I'll just keep looking for the opportunity to buy a dip. Now, we're already at the high of today, potentially. So I will be looking tomorrow to see if we can pull back within the range of what we formed today. I wouldn't want to be buying at the top of today's move. So with that in mind, let's just go through the 4 hour. 4 hours in an uptrend, I would just be starting to monitor the current 4 hour range. Keep dragging it up if price keeps moving up. And then, so this is actually from yesterday's low. So we could pull back within that range today. 62 level overlaps nicely with the 158.59 weekly resistance level that we've just moved above today. And you can see early in the day, that's where we're wanting to get support. All right. Now, if we don't pull back to this area today, then I would redraw my fib just simply across today's trading range, wherever it is. So at the moment, today's trading range is here. And then wherever the high finishes, drag the fib up. And then I would be looking at the 62.79% levels tomorrow for a pullback into that kind of zone for a continued move up. All right. I'm not going to entertain buying it at the top of the day. So at the moment, I would keep it across the 4 hour range, but I would probably adjust it tomorrow just to the day range of today's trading range. All right. So if it can dip, and it's not looking like it wants to at the moment, that is the area to watch. 158.59, you got the 62 fib at 158.60. And the more this goes up, it's just euro strength versus the yen, of course, but euro strength would help that euro dollar continue to move up and get back above 109.43 as well. All right. Euro pound. Now it's a tricky one at the moment, the euro pound, because it's very range bound. I just want to look at the monthly chart, and we're actually in a downtrend on the monthly chart. We broke below that low. That's where we turned down, and then we did have a month down and a month up last month. And we've just traded up this month into the high range of last month's candle, which has formed a weekly uptrend, but that may be finishing. This high of last week could be a lower top form if we move down this week. And on the day chart, you can see that the 86.58 level, that's a weekly high here, has been rejected once there and then held another twice. All right, so with that in mind, any revisit to 86.58 is a good selling level for sure there, but we may have already failed there now and we're just continuing down. And if I drop to my 4 hour chart just to show you the range of last month, we've rallied up to the 79% level of last month's range, and we're probably now moving down to the 127 extension, which is down at 85.01. Down to challenge just need to backtrack. I have got my fib drawn wrongly there. That's last month's high. This is an intermediary low where, yes, there's a 79% level. And yes, we could be moving down to that 127 extension. That overlaps with last month's low, but what I like to look at is the range of last month. So rather than drawing it like so, if I do it like across the whole of last month's range, the 79% level is there. It's a little bit lower than the one I was just discussing, but it gives you the same effect. We're failing at 79% of this range. We're also failing at the 79% level of that range. So I would anticipate, I'm just going to leave the fib like that, that we're moving down towards there potentially. All right. That's the direction that I'm looking at the moment. Dropping back to the day chart, we're just sitting on day chart support here at the moment, so in a little bit of trouble trying to move through that low, but a new range has been forming. This one here, now we move to a lower bottom. So now we'll be looking at this range. See, Abraham, you got your hand up. If you've got a question, just type it in. Now, that's the range, the most immediate range, and price could come all the way back up, could come up to the 79% level, could form, you know, that could be a left shoulder head, and we could come all the way back up to the 79% level here and form a little bit of right shoulder to the right hand side. That's at 86.50. So that's what I would be monitoring at the moment, is what kind of rally do we get from holding on this support line at the moment. Watch the 62 level or the 79% level. Predominantly, I'll be watching the 79% level because I can see here there's a top here and a top over there. And that would be a great resistance area to look to engage if we could get up there. Now, price might not get there, but that's, with that being so range bound at the moment, you want to try and trade the outskirts of the range. And is a downtrend starting to form within that range. So I'll be looking up there potentially. If it could offer a rally. If it can't offer a rally, I'll just be leaving it alone at the moment. All right, let's get into pound dollar. All right, pound dollar, it is consistently holding at this weekly top over here. All right. And it's been held at this day chart resistance here. And the weekly chart, there's a minor low here, and there's a major low there. If you look at the range from the major low, 62% level, it's holding the market, 126.26, and we keep holding at that weekly top. So I'm anticipating we're going to be moving up. Of course, we've got the CPI data coming out. I just want to refresh my memory. It's coming out tomorrow afternoon. So if that comes out, if that's a bigger number, we'll definitely go up. If it's a lower number, we'll probably go down. All right, but structurally down the weekly chart is remaining up. It can't really exist too long below that weekly top. So that's a buying level for the bigger traders. All right, now at the moment, we may be forming, if I just get rid of some of this information, maybe forming a double bottom down here, and we have traded above yesterday's high, so that's maybe starting to confirm the reversal. So if we have a look at this on a lower level, there's the range of the double bottom. The double top price projection for that, the double bottom price projection for that pattern is up there at 130.15. We've been failing at 130. So that would tie in with this top over here to move up to that level. And if you want to trade this as a double bottom, I like to be getting in, if I'm trading a double bottom, in the early phase, ideally at the 79% point of that range, so you can maximize your risk to reward. Now, price might not get back down to that 79% level, but that's at 126.62. But price may come back down to the 126.79 level, which is your weekly support at the moment. All right. I just want to double check that top. Yeah. All right. So I want to double check the number, 126.79. Now, of that double top, sorry, I keep saying double top, of the double bottom with the fib there, We could come back down to the 79% level. That's at 126.62. You could also look at, we're still starting to form an uptrend here on the 4-hour chart. And of course, we've got the CPI data coming out tomorrow. So you could look at that smaller range for a pullback. And when the data comes out tomorrow, you may see price pull back. Now, if your price keeps moving up, just keep dragging the fib up to the high. But you might see, let's just assume price has topped out today there, you might see a 79% retracement of that range tomorrow for then a continued move up in line with this double bottom pattern. So you could try to get in very low to maximize your gain. So if you can be getting in down here, if that occurs, and then we start to turn around, the target for the double bottom is all the way up here, pretty much the 130 level. So that would offer an excellent risk to reward. There's like 380 pips for probably a 30 pip risk if things were to run out like that. So looking for a deep 79% retracement there on the 4-hour pullback, if that was to occur, in line with that potential double bottom pattern, would give you an exceptional risk to reward. All right, so be aware of the CPI data coming out tomorrow, but I would be looking at the moment for opportunities to buy a dip with the potential of that double bottom forming there, okay? And the most ideal level, you can see it's been holding over the last week or two, is that 126.79 level. Just to pull back to that level, stop below the lowest points, and then you're waiting to see if price wants to run north in line with that double bottom pattern. All right, onto the Aussie yen, which is highly range bound at the moment. We're stuck between weekly supports, weekly resistance. All right, which way is it going to go? At the moment, I said this on the weekend, because it's in such a clear range, the range is the weekly range. Just trying to get the line to be straight, but it is here. That's a straighter line. All right, so we're pretty much stuck in the middle of this weekly range. Just to the left, if I just squash this in, there's a weekly top over here, and there's a weekly bottom here. All right, and we're just stuck between those two price points. Smack bang in the middle. So for me, if we're in a range, as we're moving up from the bottom, we held down here 4 days, testing that level before we started moving last week. I would just simply be watching to see if we can get back up to here. And then does it offer a failure? Now, if you've been in my webinar on how to trade ranges, what I do is I just draw a fib across the range. I use that high to that low. And I'll look to trade at the top of the range. Stop goes at the 127 extension to trade back down to the bottom of the range. So if you're happy to be aggressive, you could be looking to short the top of the range, like I'm just showing you the technique. Stop goes at 127R, and then you're looking for that to hold to trade back down to support. All right, so I'd be watching for that to move up to that area and look for a failure up there. Trading in the middle of the range is never high probability because price can just be chopping around in the middle. It tries to go one way and then it pulls back the other way, and you're never quite sure which way is it going. All right, to the Aussie dollar. Now, it is late in the move, but we've got this double top that I've previously discussed, and it's holding its downtrend. So this is all downtrend down here. We've actually closed 1 day below this day support level, 64.90 now, and we actually tested monthly support down here. Now, that double top, the actual price projection is down here at 62.91. So if you are short, then just pausing because somebody's saying pound yen. I forgot to do the pound yen. I'll get to the pound yen as I move back along. Sorry about that. So this double top price prediction is down here at 62.91. So can we move through support here? Monthly support. This is the low of the year, what it was until yesterday. Can we move through this level to the target? So the lower this goes, the closer we're getting to the bottom at the moment, because we've been in this downtrend now for the best part of, let me just see, best part of about 21 trading days. All right. So sooner or later, this is going to bottom and have some corrective rally up here. Now, getting in at the moment, it would be nice to see a break of this monthly low, because if we can't break this monthly low with any conviction, I would start to be concerned that this wants to rally back up. And we may start to see a major reversal from this low point. So at the moment on the Aussie dollar, I would look for a strong close below. All right, so first of all, we need a strong close below. And then intraday, I would then look to 64.58 to be resistance to move down. All right, not prepared to commit at the moment below that low. Now we do have the Aussie job figures coming out, I believe, on Friday or Thursday. Here we are, Thursday, 11:30 in the morning. So the market will definitely be volatile when that comes out. That might be the key thing that drives that below that level. We may not commit below that level ahead of then, or at least ahead of the FOMC meeting minutes, 4 o'clock on Thursday morning, okay? So, this is a key level of support down here. You need to see it break. Can it become resistance to move down? All right, pretty much like, say this level here, we broke below, became resistance, and then we came back up last week, it was resistance once more. All right, so this is actually starting to be potentially a buy zone. If we keep closing above that level, it's going to become a buy zone potentially. So just be careful down there. To keep to the short side, it needs to break clearly below 64.58 first of all. All right. And to that extent, let's just discuss this level a bit further. If we do start to see a nice clear 4-hour uptrend form, this could be a bottom to move up. We could, if I just clear off some of this information, we've had quite an extended move down. We could see an extended move back up within this range, maybe to a 62% retracement, before being able to commit further to the downside. This has been a long move down at the moment. So if you start to see a clear 4-hour uptrend form, we have moved to a higher top today. If we don't take out this bottom today and we form a little bit of a higher bottom here, so let's say we trade down to 64.58, can't trade through and put a higher bottom in there on the 4-hour chart, we may be moving back above. If we close today back above 64.90, so today, even though we're below at the moment, if we close back below day support, 64.90 today, we could well be moving back up to 65.64, even up to the 65.95, 66 level. All right. It is rather overextended. So there's two sides of the market to look at there, and some news items that are definitely going to affect this pair, the FOMC meeting minutes and job figures on Thursday. All right, let's jump into, I missed the pound yen before. I put this out on Telegram earlier today. I was looking for a pullback to weekly support now. We broke above it, broke above resistance to become support, but it never pulled back. So at the moment, we're having a clear move to my day chart here. This weekly top to the weekly chart, there's your weekly top. Clear weekly uptrend here now, higher bottom, higher top. Next major level of resistance is at 188.80. Clear weekly uptrend, clear monthly uptrend. Really, you're looking for some kind of pullback. And I would still be watching for the potential of pullback to 84, 184, because we held there 2 days last week. Thursday, Friday, Monday popped above. So I was looking for a pullback to there today, but it never came. We could definitely pull back to 184 this week. All right, but we'll have to wait and see. This has had now 1, 2, 3, 4, 5, 6, 7 days. 7 positive days up. So it is due a pullback. It's very difficult to be, thinking about buying at the top of a day when it's the 7th day up, isn't it? Well, it is for me. So I would be, cautious. I would be looking for, can we have a day down? Can we pull back to 184? So on the 4-hour chart here, I will just be monitoring the 4-hour range for a pullback. All right. And assessing what price looks like as it pulls back to the 62.79% level. All right. Look for a pullback and then look for a turnaround and a move back up. Dr. Arpitha, you're asking me, how do we get in the Telegram? Just contact Nathan Bray. I put his details in the chat before. I'll just put his contact details in again. There you go. All right, so a bit overextended at the moment. So we're looking for a pullback within that 4-hour range that's been forming at the moment. Ideal level would be 184.00. All right, New Zealand yen, which is a bit difficult at the moment, very range bound. I'm just going to drop to my weekly chart. We may be putting in a lower top here on the weekly. And we've been holding at this weekly top here in the most recent price action. It's getting difficult to determine which way it wants to go because you've got a lower top on the daily, a higher bottom. But from the weekly chart, even though we're maybe putting in a lower top here, if we're just basing our decision-making process from the week before, we actually were positive the week before. So are we going to be positive again this week? But if I'm being honest, I would look to a better pair. This is very range bound and consolidatory at the moment, but it might be putting in a lower top to move lower. We'll have to wait and see. It's very difficult to determine. Very mixed on the daily. I will be watching 87.30. That's that weekly top here. What happens if we get back up to that level? Of course, part of the reason why it's very consolidatory, got the interest rate decision coming out tomorrow as well. So I'd have to wait to see what happens from that at the moment. And then, we'll look to see what kind of price action forms after that. So at the moment, I'd be looking at a better pair, but you could watch 87.30. There's the potential for this high up here to be a weekly lower top. So I'll just watch 87.30 to see if it can hold as resistance maybe for a further move down. All right, if it breaks above 87.30, I'd have the idea we're moving up to 88.16, which is this monthly top over here. But very range bound, so I'd look to a better pair. New Zealand dollar, very similar to the Aussie. We've got some form of double top or even triple top running out at the moment. And price projection for that, trying to find which is the actual low. It's that low there. All right, so we've actually broken the midpoint of this kind of double top, triple top, even quadruple top through this area. Been very negative. Now, like I was saying on the Aussie dollar, it'd be great if we could close below monthly support, and then monthly support becomes resistance, because that's kind of what's happening today. Yesterday we closed below monthly support, and today we've moved up and it's been resistance intraday to trade down from. So this could now be continuing down. We've got day support at the moment. Next level to watch is 59.38 day support. The double top price projection is down here at 55.85. Double top price projection is just the height of the pattern projected below, and it's the opposite for a double bottom. All right. So if this is a true double top, we could well be moving down to 55.85. And if we get a very negative close today, you can then potentially start to think we've committed below this support level to move much deeper down. So the 4-hour chart is going to show you that we can see all the tops of these 4-hour candles. They're all holding. We've had now 1, 2, 3, 4, 5, let's call 6, 7, 8. There's at least 8 candles there, pretty much, that have been headbutting into that monthly low once we got back below, wanting to be held there. So that at the moment is telling you that the sellers are clearly just sitting there, absorbing any buys. So 55, whether or not we can get back up to there, it's 59.85 is that level. That's the level to watch. Now that's where the sellers are coming in. Yesterday's trading, start of the new week, drop below. Holding 1, 2, 3, 4. Let's call that whole area once. That's 5 times there at least. We're holding on a test of that level. So you could actually draw a fib across that most immediate range for the day. 79% levels up there at 59.87, in line with that monthly potential resistance level. Now that would be the area to watch for an opportunity to sell, in line with that double top that we're seeing moving down the chart and it breaking below that monthly support level, becoming potential resistance now. All right. Of course, if you're trading today, are you going to hold it into the news event tomorrow? I mean, you could be still watching that level tomorrow after the news, after the volatility subsides. Does that level get tested? Does it be resistance once more for a further decline tomorrow? Okay, that's worth watching that level tomorrow. All right, dollar Canadian. We've also got the CPI data coming out this evening. Let's just have a look at the figures potentially they're expecting. Expecting a month-on-month uptick. Expecting a year-on-year downtick year-on-year. So if that downticks, potentially the dollar CAD's going to move up. It's going to be weaker. It's going to be a weak announcement for the Canadian side. So the dollar CAD would move up. All right. So if you're interested in trading in dollar Canadian, if we get a weaker figure, dollar Canadian should move up. If we get a better figure, the dollar Canadian should move down, potentially. So we are trading up to a level that we haven't been able to move above. So that was actually Tuesday's candle. So if I just highlight it, here's Tuesday's candle. All the trading since Tuesday has been within the range of Tuesday. There's Tuesday's range. I did say last week, watch 133.86 to be support. It was on Thursday. And we're moving up within still the range of Tuesday. All right, so we may well see one of two things are going to occur. We're either going to come up and retest 135.01 and hold, and that may give a shorting opportunity because this weekly range here of sorts, this range here, will be, I'm pretty sure we're at a fib level, just a little bit short of the 79% level. Let's just want to double sure I've got the top of that weekly top. All right, so there's a 79% level up here, 135.33, and you've got the 135 level there. So we may see, so I'll have to monitor to see what happens. We may see a failure at 135. We may see price come up to this 79% level. There's an imbalance over here that got formed that hasn't been completely filled yet. That's the remainder of it. So we could actually come up to fill this imbalance and then start to turn around and move back down the range. So yeah, 79% fib there, 135.33. Top of that imbalance is around about that area there at 135.67. We may see a stub up to this area, but then what happens up there? That could be where we start to want to top out for this pair. We also have to watch to see what the data brings, and it is still an uptrend at the moment, but we're getting into an area where we could technically top out. So you just, the more this moves up, the closer we're getting to the top. All right. Any movement up at the moment, I would suggest on the dollar CAD is getting into the very much profit-taking area of the chart at the moment. So You know, the more you're waiting to get in, the closer you're getting to the top. You know, that's been quite a strong move up at the moment. Maybe at the top of the move there. Dollar franc, it's rather choppy, but what it is doing is just poked up to weekly resistance yesterday. All right, just here. So we've had this down move or rally back to broken support. That looks like about a 50% retracement of that range. And what it is doing is predominantly this low over here is a monthly low. So we've got two monthly lows that we broke below on this collapse down. Those monthly lows are here, 87.57 and 86.99. Now we're below 87.57 today. So it's really struggling to hold above that broken low. And it obviously rejected the more minor low here on the weekly chart, this low here. So that's down. This is just corrective. We could be putting in a lower top here long term to move down. Now at the moment, it's rather consolidatory. It rushed up yesterday, but it can't hold its gain of yesterday. Yeah, if we close below 87.57 today, then potentially we may be seeing a movement back down the range. But price action is not easy going on the dollar franc. It's very consolidatory. And I would suggest the FOMC meeting minutes might stir the overall direction for this particular pair. All right. But if we are moving to the downside here, the 4-hour chart's still up. You'd want to see, perfect scenario would be a move down to break the 4-hour low. And then look for a rally. And you know, in a perfect world, it'd be great if the 62% level overlap with your monthly resistance level here, but whether or not price structure will do that for us. But you know, a clear change of the 4-hour trend would be great. And then watch 87.57 or close to that area to be resistance. Does that flip back to resistance for a move down this way long term? All right. I think yesterday's move up, failing at the weekly level, 88.20 could be the final top. And then I'm just looking for structure to change its form and then look to sell a rally, okay, on the dollar franc there. Unless the FOMC meeting minutes surprises. If they're more bullish than expected, that will obviously be more strength to the US dollar, and we'll see the dollar franc continually move up. All right, to the dollar yen. Now I was looking for a pullback. I put this out on Telegram today as well, but it didn't pull back. But the level I'm watching to my daily chart here, we've moved above this top, 145.06, testing a daily level of resistance over here. We actually just feel this imbalance to the left here too. So that could be a potential topping out point, filling that imbalance. But at the moment, the trend is clearly up. And you know, if I drop to the weekly chart, this is in a clear weekly uptrend. 147.68 is a monthly top from back in time. Over here, we could be targeting that as we're moving up. Back from February 98 sometime, or sometime in early 98 anyway. All right, so a clear uptrend. So with this breaking above the weekly high, that should be support on a pullback in the short term, if it can pull back. So I've been watching for a pullback today to that level, but it hasn't been getting there at the moment. So I've been monitoring the 4-hour range. In fact, I tell a lie, I was monitoring yesterday's range, which was that. Then we've moved above, so I'm just dragging it up from yesterday's low. And the level I was watching was down here, just becomes a little bit wider. So I'll be watching now at the 62% level, 145.10 down to broken weekly resistance becoming support at 145.06. And we've also got last week's high down there at 145.100. So 10 pip range there, 145.10 down to 145.100. Can price pull back to that area and be supports. All right. I don't buy at the tops of moves. I'm looking for a friendly decline if we can get a decline. All right. Primarily looking at 145.06, that weekly top broken above. Can it offer to be support this week? So some of these yen pairs at the moment, dollar yen, euro yen, pound yen, I've barely had a pullback today, and they may not pull back to these levels. We just have to monitor. But it's very difficult being a buyer just at the top of a move, just because you've got the fear of missing out. All right, I don't have the fear of missing out, so I'm always looking for a pullback. Sometimes it doesn't occur, but I have no problem missing out. What I don't want to do is buy at the top of the move and then it pulls back, because that's very annoying. Okay, so watching down there at 145.06. And last but not least, let's have a quick look at gold, which continues to move down, not really having too much of a rally. So there is most definitely, as I move through to the higher time frames here, the potential of a triple top forming there on the monthly, which is quite clearly seen on the weekly too. 1, 2, 3. And we're putting in a lower top on the weekly. We don't have the lower bottom yet, but if we break below, if we trade below 1892, which we're heading towards, we're going to have a downtrend here on the weekly. Now, if that does occur, that potentially is going to be much more positive for the US dollar, you would have to say. And then if that's the case, pairs to the US dollar would maybe decline. So we'll have to wait and see what happens. All right. So the day chart trend is quite clearly down here. It's actually moved below. That line here is a weekly area of support from over here that we held, a good two months or so ago. Got some form of support there, but we're closing below last week. This week's high is pretty much at that level. Yesterday's high, tagged it. So on the 4-hour chart here, you can see we came up to tag it and we've been trading down. So at the moment, it's just in a clear downtrend. I would monitor the 4-hour range and look for a rally back up the range to the 62 level. 62 level overlaps with last week's low. That would be a good level at right about 1911 and the 79% fib at 1913. We'll look to sell a rally. Don't look to sell the bottom. Look to sell a rally, okay? So somewhere like so. 1911 to 1913 area, approximate. You got broken 4-hour support there too. That's last week's low. So broken support becomes resistance. That's what would be a good level, 1911 approximately. A rally back up to there. You see the 4-hour chart here? It's down, rally, down, rally, down, rally, minor low, rally, down. We're going to get another rally to move down, okay? Sell the rallies in a downtrend. Don't sell the bottoms. Or to sell the rallies, okay? All right, so some of these instruments at the moment or pairs are a little bit overextended. Just need to be patient. There are some news events coming out. Primarily this evening, the Canadian inflation data and the US retail sales. Empire State Manufacturing Index into tomorrow. We've got the New Zealand interest rate decision at noon. These are New South Wales, Queensland time. And UK inflation data tomorrow at 4 p.m. and the FOMC statement early Thursday morning. All right, be aware of all those news items. Don't have the fear of missing out. Just look for a very strong level to trade around and just be patient for price to get to your levels. Okay, any final questions before we wrap things up? Tomorrow, we're going to be going through with you, if you wanted to come and have my company, a trade setup called the swing point break. So we're taking you through that tomorrow evening at 7 p.m. So if you have a time, I look forward to seeing you then. Other than that, I don't think anything further is coming into the question boxes. So thank you, Dr. RP there. Slav, to you, thank you very much. Hope the market's treating you well. All right, everybody, have a great trading week. Just be aware of those news items coming out. There are a few risky events coming out. Don't get caught. And with that in mind, if you have time, I look forward to seeing you. Of course, I know we've got the Matildas tomorrow, but I don't think the match starts till 8 o'clock on the evening when the webinar finishes. So you won't miss too much. All right. Or you'll miss as much as I miss, because I'm going to be watching it after the webinar. All right. So go to the Matildas. All right, everybody. Thanks very much. Have a great day wherever you are.